Thank you to my co-hosts and all of you out there who have tuned in to learn about the insurance coverage and home hardening in California. With the recent fires in Southern California, we have all become acutely aware of the danger of wildfire in our state. We've gone from having a fire season to a constant fire threat every day, 365 days a year. Assembly District 28 includes the Santa Cruz Mountains, which was the victim of the CZU lightning complex fires in August of 2020. Residents in that region started calling me after hearing and seeing the devastation in Southern California and asking me what they could do to keep this from happening again. And how do they navigate the insurance challenges that face them today? I'm so glad our state insurance commissioner, Ricardo Lara's office reached out to me and offered to co-host this meeting tonight. I'd like to introduce Commissioner Lara to you. Raised in East Los Angeles by immigrant parents, Commissioner Lara previously served in the California legislature, representing Assembly District 50 from 2010 to 2012, and Senate District 33 from 2012 to 2018. Commissioner Lara earned a BA in journalism and Spanish with a minor in Chicano studies from San Diego State University. Ricardo Lara is California's 8th insurance commissioner since voters created and elected the position in 1988. So I turn the floor over to our Commissioner Lara. Thank you so much for being here tonight.
Thank you. Good evening, Assemblywoman. It's great to see you and talk to you, and thank you for hosting this important workshop and town hall. As you rightfully said, people are naturally stressed and have anxiety about what we just experienced down here in LA, which is going to be the most costliest fires in US history. And so not only are Californians concerned, but every insurance commissioner across this country has been asking me the same questions. Folks in Northern, Central Coast, and throughout the state have been asking is, how is this going to impact, our own insurance rates and availability and affordability, not only in the rest of California, but throughout the entire country. And of course, the reinsurance sector, which is global as well. And so thank you for inviting me to speak today. I can nerd out on insurance all day. And thank you for your leadership in protecting consumers, especially as we continue to fight for our right to vote and to expand voting access. I know that's something that you're so passionate about. So our communities, once again, are facing serious insurance challenges. And I completely understand their concerns, and I'm grateful, again, for the opportunity to address some of these issues with you tonight. Many of you have recently received non-renewal notices from your insurance company, creating uncertainty and leaving you searching for new coverage. This comes just a few years after, as you said, this community has already endured the devastating CZU complex fire, which destroyed hundreds of homes and upended countless lives. Unfortunately, what you saw on TV in LA, you've already lived it. And I want you to know that we're fighting. We're fighting to keep our market strong, to give you more choices, and to bring back insurance companies that have left so that they can once again fight for your business and draw down that cost. So after the CZU lightning complex fire, we took swift action to protect consumers and survivors. We issued those moratoriums on cancellations and on non-renewals to keep your coverage in place during the recovery. And now as non-renewals increase, my team is making sure that insurance companies pay every legitimate claim and that it's fairly and that they follow through on their commitments to consumers. So you've been through enough and you deserve stability and access to the insurance that you need to protect your home. That's why we created the Sustainable Insurance Strategy, which really represents the largest insurance reform in more than 30 years to stop companies from walking away from high-risk areas and bringing back stability to our market. Again, it is insurance companies' jobs to pay claims, and we are making sure that insurance companies honor those commitments. And we will continue to collect claims data directly from our insurers and sharing it publicly to guarantee that transparency. So let's talk about stabilizing the market with actually real reforms. For years after wildfires, insurance companies have done three things: raise rates, stop writing new policies, and cancel coverage and the moment my moratorium powers expire. This is entirely legal right now under Prop 103, but it's also very wrong. And that's why my team and I are reforming this system. The sustainable insurance strategy really focuses on companies to stop abandoning entire regions. And under this new framework, if insurance companies want to use state-of-the-art catastrophic modeling or including the cost of reinsurance in their rate calculations, they have to guarantee that they're going to write more policies in the areas, including in our wildfire-prone areas like in your own district. This is a historic agreement, something no past insurance commissioner has ever achieved. It means companies cannot cherry pick just the low risk areas while ignoring communities like yours. While we can't predict every rate change, these reforms will make the market more stable and predictable, which will over time help reduce cost. So in the immediate aftermath, for example, of the CZU Lightning Complex fire, it's one of the ones I can never remember the entire name, but the CZU fire, I issued a mandatory moratorium preventing insurance companies from canceling. This protected thousands of homeowners from losing their coverage. Moving forward, we're going to continue using my authority after any governor declare disaster anywhere in the state to make sure consumers are protected. That is already statute and law that we will continue to use. So let's talk about some real progress and some real results. So the reforms that I just talked to you about are already driving positive changes. Farmers Insurance reopened its condo and apartment coverage, providing essential options for Californians. Allstate announced it's going to begin writing new policies once my reforms are fully in place by this year. We're now implementing those changes, and more companies will follow, creating a healthier, more competitive market. So my job as the insurance commissioner is to, again, protect you, hold insurance companies accountable, and make sure California's insurance market is stable and sustainable, and working for the people who need it the most. So we're also advancing a comprehensive bill package of more than 10 bills designed to protect wildfire survivors that we can get more into those tonight. But a few of these bills are very important. Leading, again, from the Assembly is the California Safe Homes Act, providing tax-free funds to help you harden your home, to reduce that wildfire risk. I've heard countless of your stories saying, yes, I want to harden my home, but I'm retired. I can't afford it. I could barely afford my insurance and my mortgage or my rent. This is going to give you money in your pockets up to $10,000 untaxed to do the home hardening that you need to do, the metal roof, the surrounding perimeter. And this is going to be a grant. And guess what, Assemblymember, your area is one of those priority districts to get this money because we don't want to repeat this fire again. And we know that mitigation works. You're going to have our amazing folks at CAL FIRE explaining how this works. We've all seen that famous picture now of the Lahaina fire, where it was that one house left standing in the middle of so much destruction because that was the only house that was hardened for fires. So we want to make sure that we give you money to actually do that. That's money well spent. The insurance companies recognize that we need to do that, so they're all on board. And this has been leading from, like I said at the hearing, the commissioner from Alabama will be with me at the Assembly hearing so that he can demonstrate how they've transformed the Alabama insurance market against hurricanes and windstorms. And we're also going to eliminate finally the list. So many of you called us on this, is ensuring that wildfire survivors automatically receive full contents coverage without having an itemized list of every lost possession. It's horrible to make people do that in the midst of just total devastation. And then what are you going to go back to the ashes and start doing this list before you get contents coverage? No, you can no longer. We're changing the law, and hopefully it gets signed to eliminate that, so you can receive your full contents coverage without providing this damn list. It's horrible. And for our businesses, the Business Insurance Protection Act is going to extend our moratorium powers to our businesses, to our nonprofits, to our HOAs. How are we going to rebuild the backbone of our communities if we don't allow our businesses that same protection so that they can actually build build back faster and have that protection and not have that worry. I also want to talk about the FAIR Plan really quick. I want to dispel several myths about the FAIR Plan. The California FAIR Plan, access to insurance requires, it's a plan, a private association that is managed by California insurance companies. We're not going to get into admitted. It gets confusing. These insurance companies collectively cooperate and contribute to the FAIR Plan. So sharing this risk associated with covering high-risk properties across the state. This is not run by government. It's not run by it's run by insurance companies, to say. However, the Department of Insurance has authority over its plan of operations. And this is where it becomes important, because it's meant to be the last resort, not your first option. So using my authority, I have directed the FAIR Plan to hire more claim staff to speed up payments, maintain a healthy reserve for future wildfires, because Assemblymember, we haven't even entered summer wildfire season. And we've already had some of the most devastating fires already in 2025. So I don't want to say that to alarm people, but we need to be able to protect everyone in the state. And we protect consumers by, from bearing all the cost from recent FAIR Plan assessments, by making insurance companies share that burden, finally. And so the last FAIR Plan assessment was 30 years ago. In 1993, guess where these fires were at? In the same exact areas that the fires occurred in LA in January. So clearly we didn't learn our lesson in 1993. We let people continue to build with the same materials and without the fire hardening that should have happened. And that cannot happen anymore. We would do a disservice to our future constituents or future Californians 30 years from now, if we're even lucky to survive 30 years. This can no longer happen. The fires, and then we had the Northridge earthquake in 1994 and fires from that again. And so this is why I'm saying, look, I don't want to be an alarmist here, but we cannot just build back the way we're used to. We have to be smarter of how we build. We have to use building code upgrades, and we need to give people money to do the mitigation that we know works. So we know how difficult it is to face this insurance instability, but we're making real progress. My reforms will make insurance more available, more competitive, and ultimately more affordable. If people have any questions or need assistance, please visit us at insurance.ca.gov. You can also call us at 1-800-927-4357. We have real live insurance experts Monday through Friday answering those calls. Don't worry, you're not going to overburden us. We speak every language. We wanted you to speak in the language you feel comfortable, and we're here to help you and understand your coverage and protect your rights, and again, hold insurance companies accountable. I've spoken way too long, but I just want to make sure we got all that in so that we can allow other speakers to talk. So thank you, Assemblymember.
No, well, thank you so much. And that's a wealth of information. And I know you're working really hard to bring those insurance companies back to California. We do have some prepared questions that people submitted. So if I can shoot those to you.
Absolutely.
We do that now? Okay.
Yeah.
So if I do home hardening, how will that get reflected reasonably in my insurance rates?
Absolutely. This is something that is so important. It's a great question. As I said, home hardening is one of the most effective ways to reduce wildfire risk, and it should be fairly considered in your insurance pricing. That currently does not happen, which is one of my biggest frustrations, because we're asking people to do the mitigation, spend thousands of dollars, and guess what? You still get dropped, or you still get a higher rate increase. That is not fair. We need to make sure that those rates reflect the mitigation you've done, and we're finally going to be able to do that through our Safer from Wildfires program, which establishes a clear home hardening standards that insurers must recognize in their underwriting and pricing decisions. So that is part of our reforms, and we will be sharing that information on the chat. And the standards are for your home, your immediate surrounding as well, and for your community as a whole. We created community-wide mitigation standards for the first time, because guess what? Insurance companies are not just looking at your parcel. They're looking at the entire community. And so they're looking at the unique topography, the landscape, everything. And since we're so geographically and diverse, and we all have different topography and different slopes and wind and so forth. So it has to be really tailored to your community. And we'll be able to have the technology to be able to make sure that those rates reflect the community and that reflect those home hardening issues that are important. So these efforts are critical in making insurance more accessible, affordable, and fair for our consumer. We're way behind the ball on this. We should have done this 30 years ago, but we're finally going to be able to get that done to make sure that those rates, those hardening, reflect the rates.
Great, great. And I know those mitigation grants will be very helpful in people doing those home hardening tasks.
Correct.
Other question, what should you do if your carrier cancels your homeowner's insurance policy, and what are the options?
Perfect. That's a great question. So if your insurance carrier cancels or non-renews your policy, you should first contact them to understand why. Then you should shop around with other insurance companies, as different companies have varying risk models or coverage options. I would also say, use other insurance brokers, use other insurance agents that may be located in other parts of the state. I know United Policyholders, Amy Bach is going to be speaking a little later. She literally is the expert on what are the techniques that you can use. And that's important because different brokers have different coverages, different companies, and they might be able to have more availability for Northern California or the Central Coast if they're a Southern California broker, for example. So this is important for you to understand, and Amy's a master at this. But if no insurance options are available, of course, we have the FAIR plan, and that's the insurance safety net. But again, if all that and you're still not satisfied, call us, because one of the things that we like to do is we want to sift through that letter that you got. We want to look at your policy. We want to see if we can capture anything else. And if they haven't followed the letter of the law, often we're able to keep you covered, or at least been able to extend that coverage until that gives you a little bit more time. So it's also important for you to just call us and share the letter with us so that we can see what we can do for you as well. So you have multiple options, but Amy can really go into detail for this because they really created the expertise on this.
Great, wonderful. Okay, next question. What specifically is in the upcoming plans to address the homeowners insurance crisis without pricing everyone out of the market?
Great question. These are really good questions, by the way. Restoring a stable and fair insurance market is one of my top priorities. And the sustainable insurance strategy is really the most significant reforms, like I said earlier. So this is what it includes. Expands coverage limits in high-risk areas as a condition. So they can't just pick and choose anymore. Like I said, we're making sure that insurance companies are helping people get out of the FAIR plan and go into the general market. That also is an important requirement. So they just can't leave people on the FAIR plan and get new business. They have to get that new business from folks that are in the FAIR plan first, so that we're alleviating and deflating the FAIR plan, ensuring that mitigation efforts like your home hardening and your fire-wise community participation are factored into the rates, as one of the questions said, and that we're bringing insurance companies back to California, which will increase competition and create better options. One thing we're also doing is we're meeting directly with the reinsurers, who are the ones that insure the companies, to make sure that these reforms are aligned and that they feel comfortable continuing to invest in California. This is why it's important that we kind of jump over the insurance companies and meet directly with their insurers that are insuring them, so that they also understand, because the cost of reinsurance is almost tripling now with these fires. And so we need to make sure that they still keep committed to California, so that our domestic insurance companies can continue to expand. These reforms, again, are designed to increase the availability, reduce volatility, and move our market towards a more long-term stability and affordability for Californians.
Great. How do we ensure that the FAIR plan is fair and transparent, and how can we stop insurance companies from dropping people just because they file claims?
Yeah, the FAIR plan actually has to be fair and transparent. One of the things that we did is to make sure that if the fair plan ever faces any financial strain, that there's a structure in place. It has to first exhaust its reserves, retain it, and from its retained earnings, its reinsurance, and other financial safeguards. In addition, additional funds also, if additional funds are needed, insurance companies are responsible for covering that. Additionally, insurers cannot drop policyholders simply for filing, legitimate claims. And we're also asking the fair plan, to restructure their entire process, update coverage limits, allow for our businesses, our HOAs, and our nonprofits to also, and our home builders to be able to use the fair plan, because what we're seeing is that insurers are not writing for and installing affordable home projects. So we redid all of that. They need to be able to hire more people to address these issues and improve their customer service, for goodness sakes. It's like, they're the insurer of last resort, but they don't want to make it easy for you to be able to contact them. That is unacceptable. And we're also currently doing an audit that will release hopefully in the next month or so, that guarantees some more transparency, so that we know if there's any financial problems with the fair plan, that the commissioner knows beforehand, so that we are all operating with the same data and transparency. And also for you, Assembly member, as these fires were happening, people were, I'm sure, asking you, because I got heard from other Assembly members, is the fair plan going to fail? Is it going to fail? Is it going to go insolvent? And if they're not transparent, even with the commissioner, how am I going to be transparent with the public? And all this misinformation just creates more anxiety. And so we're going to finally get some really reform in the transparency, so that we can see their financials and that we can all operate under this data, so that we truly can understand if there's any peril in the future. And that's critical as we're entering the summer wildfire season.
Absolutely. And I know that that's one of the main phone calls we get into our office as well, with people trying to get help from the fair plan. So we'll be posting our number in chat as well for people to call. So this next question, what are the cheapest options? I'm guessing that's about home hardening, but and how much would a FireWise community save and their insurance costs? And what if neighbors don't participate? Because you said they look at the whole community.
Yeah, a FireWise program is a proven way to reduce wildfire risk, and many insurance companies offer discounts for our homes in FireWise communities. These discounts vary and can be significant. We're also going to study these discounts and see what's happening. As you know, we were the first in the country to mandate this discount, so we might have to rejigger and reassess these to make sure that people are getting appropriate discounts. So the more that you do, it should be the more that you do, the greater your discount. And so these FireWise communities can be created, as you know, with only 8 homes. And so it's hard to tell how much they should give you, because each of the policies are so unique and tailored. I would say, if neighbors don't want to engage, this is where we need you to be at those, local community meetings and at the city council and town halls, because this is critical. We're all in this together. And often what I always tell neighbors, and I actually experienced this, I don't know if it was in your district, but it was definitely, it was in the Bay Area and the East Bay, where people were assuming that one neighbor didn't want to do the home hardening, and when they went to go visit, it was actually an elderly couple that were living in isolation and couldn't go out and do the home hardening. So the entire community went and actually helped them out. And so it takes us to, start talking to our neighbors. And I know that's something straight out of the 50s, but we need to start having those discussions and seeing, because a lot of these folks are elderly, disabled. Obviously, and then we have to know if that property is owned by a landlord that may not even be in the country or in the state. But then we can work with our local governments to address those issues. So this is why we all need to start getting engaged to address this, because obviously, these fires are not going to go away, and we need to be more prepared. And so those are some of the techniques and tools that I would suggest.
That's great. And just a shout out here, we're going to be doing a workshop in person on May 15th at the Almaden Senior Center where we're going to talk about home hardening and having someone there from the Fire Safe Council. So just for all the listeners here, it'd be a great thing for you to join us there. Just the last question before we move on to Amy Bach. I live in the CZU fire area. What's happening with State Farm? Will the cost of California Fair Plan continue to increase?
So the goal is, let's talk about the FAIR Plan. The goal is to depopulate the FAIR Plan. I think we'll start seeing, I'm confident that we could start seeing some changes and some real results by the end of either this year or the beginning of next year. Now, these LA fires are kind of complicated, but we're implementing all these reforms now. And so you start seeing getting people off the FAIR Plan into the traditional insurance market, and hopefully getting you more money, more coverage for less money. The State Farm and other insurers have been reassessing their business in California due to these wildfire risk and increasing claim costs. However, again, my reforms are already making this difference. The FAIR Plan remains financially stable. It's important for you to know that. The future of the rates will be based on past and projected losses, subject to my department's approval. And of course, my goal is again to restore this private market. But I'll tell you, on the State Farm, they're the largest carrier, and they keep asking for these rate increases. If they are justified, we're going to review those. But I need data to see how they're going to fix their financial house, and that it's not Californian consumers that are going to bear the burden for any financial mismanagement that they've done. And so we're going to make sure that we go through the public process that exists to have this be adjudicated by a judge to really get down to their financial condition. Again, because we want them to be honest. If they are in some sort of financial turmoil, I need to know that sooner rather than later. And what are they going to do to get their financial house in order before they come to the consumers for another rate increase?
Right. Well, very good. And I was hopeful to hear you talk recently about the Paradise community, and that insurance companies are starting to write policies there again. So let's hope that happens in the CZU area as well. Okay, and looking at our time here, let's go ahead and welcome our next speaker. Thank you so much, Commissioner Lara. That was extremely helpful, and appreciate you being here and taking time out of your schedule. I'd like to now welcome Amy Bach, our next speaker. She's the Executive Director from United Policyholders. Amy Bach has been a professional insurance consumer advocate since 1985. She co-founded United Policyholders in 1991 and serves as the organization's Executive Director and primary spokesperson, shaping and overseeing the Roadmap to Recovery, Roadmap to Preparedness, and Advocacy and Action programs. A nationally recognized advocate for policyholders and an expert on insurance trends, claims, coverage, law, and public policy matters. Bach is in her second term as an appointed member of the Federal Advisory Committee on Insurance and has been an official consumer representative with the National Association of Insurance Commissioners since 2009. She is also a member of the Fire Victim Trust Oversight Committee and a Redwood Credit Union Associate Board member. So I will turn it now over to Amy Bach. Thank you so much for being here.
Thank you, Assemblymember. I keep saying I got to shorten that bio. I really appreciate the opportunity to be with you, and I know my organization has been farmed out around the state, often in coordination with the DOI, and also on our own in communities like yours, answering people's questions, just like what we're doing tonight. And our organization has been around for 34 years, and we are a 501c3, so we don't take money from insurance companies, and we really focus on trying to solve problems. I have a little slide deck I could share with your constituents. I know in the interest of time, I'm not going to get through all the slides, but this will help us just kind of hit a few key points. So I think you've already heard the commissioner talking, and everybody is well aware, that's partly why you're here, that we are in a seller's market where options are few, prices are high. What started as a crisis in the rural areas has migrated to the cities as well. So if you talk to people in Chinatown in San Francisco or downtown San Jose, people are feeling the same kind of pain of getting that non-renewal notice that people in the rural areas have been having for quite a while. Why is that? It's largely because of the technology that insurers are using. It's also the wildfires, but it's also very much technology. So a lot of people, again, nobody needs me to tell you this. A lot of people are having to turn to the FAIR plan or what's called a surplus lines insurer, a brand they've never heard of, to find coverage. Because my organization has been bringing support to wildfire impacted communities like the Santa Cruz Mountains for 3 decades, we feel we have to still remind people, even with prices being high and options being low, you still want to try to have your dwelling insured for its replacement value. The Chronicle, San Francisco Chronicle, just did a big piece on how common it is for people to be underinsured, and that's a really big problem we've been trying to tackle for many, many years. And the two things you can do, in addition to trying to get your coverage A right, your dwelling coverage number right, like what would it actually cost to put your home back, is to buy extended replacement cost and building code upgrade coverage. Those are two endorsements that will give you some padding, because clearly the calculators that insurers have been using are wrong. They skew low, and people end up having less than they need. So those are two things you can do to avoid being one of those households that is in the 2/3 of people who are underinsured. So what you heard the commissioner outlining his sustainable insurance strategy is it's on track. And in fact, going into this year, we were all feeling pretty optimistic until the LA fires hit. We were starting to see some real good glimmers of hope. I think I'm still seeing some. I'm going to share a couple of pieces of good news. But I think the real recovery is still a little ways out. That said, the insurance commissioner has given insurance companies the tools they said they needed to be able to do more business here in California. So this is just a few bits of lingo. There's a difference between canceled and non-renewed, right? Canceled is you're in the middle of your policy. For most of that's they're very limited reasons an insurer can do that. Different rule with non-renewal. So as long as your insurer gives you 75 days notice before the policy expires, they can non-renew you if there's not a non-renewal moratorium in place. And I believe yours have all expired. You had some moratoriums in place after the fires, but those have expired. So 75 days notice, and if they don't want you, they are still free to drop you. We don't have any laws on the books that force insurance companies to take customers they don't want. That said, we do have a law that requires them to participate in the FAIR plan. That's an involuntary association. So you have that as a fallback. You can also, if you have no choice but to go to the FAIR plan, you can buy a gap filler, a DIC, that will give you coverage that the FAIR plan doesn't give you. One of the places that people are going to get coverage when they get dropped is to these non-admitted. They're in insurance land, there's always like 3 words for the same thing. So you have admitted, those are the brands, State Farm, Farmers, USAA, all that. Then there are these other ones called non-admitted. And some of those are becoming much more prominent, and a lot of you may already be insured through one of those companies. All right. The other thing you need to know is that you have a score now. You have a risk score assigned to your home. And it's important to understand, why is this all happening, right? Clearly, increased wildfire risk due to drought conditions associated with climate change, and increased people living in these wildland urban interface areas is one reason. But when you look around the country to states that don't have wildfire risk, they are having problems too. A lot of people are getting non-renewed all over the country. And so I have come to really believe that the true biggest driver of what's happening to all of us, and why the market is so funky, is technology. It is the risk scoring systems, the aerial images, AI, and data mining that has magnified risks that insurers were taking for decades. I mean, I can't tell you how many people I've talked to who said, I was insured with this company for 30 years. Nothing has changed. Why are they dropping me now? And the answer is that the technology that insurers are now using has put basically a scarlet letter on the house and said you are a high risk because of our algorithm. And that's the biggest driver, right? Yes, we also have inflation, and insurers are having to pay more for their high level protection that they buy. This is just some guidance my organization offers on our website for you to digest. What do you do? We do shopping help webinars about every 4 months or so. We're going to be doing one at the end of May. And you can sign up on our website to get notified about events that we are offering, because we try to stay very close to the ground, as the commissioner said. I talk to agents all around the state, try to take the temperature of who's selling where. So 75 days notice they've got to give you. And then if you cannot find anything in the private market, you can go to the FAIR plan. Because of these surplus lines, non-admitted brands you've never heard of, being a little bit unfamiliar, it's even more important today to find a really good agent, somebody who's not drowning their sorrows in the local tavern about how bad their business is, somebody who's actually really on the case, hustling to find markets for their customers. That's what you need. You heard the commissioner talk about the discounts, and I'm going to emphasize that. You're going to be hearing from Chief Morgan with CAL FIRE. Doing what you can to reduce risk is critical, okay? What do we have coming up? We've got these regulatory changes that the commissioner and his team put into effect are already starting to take hold. Again, the LA fires did not help restore insurers' confidence, but they got these tools, including there is the regulation that the commissioner has put into effect that insurers have to write more policies in areas that are considered distress, where there's not a lot of competition. So we should see some improvement. Your risk score is a big deal. You need to know what it is. The DOI has put a regulation into place that here's the rule that when you apply for a policy or before you renew, you can request your score and then ask the insurer, what does this score mean? Why did I get this score? What can I do to lower my score? And if they tell you, oh, well, that's because, your roof is too old, but in fact, your roof is only 10 years old, that's a basis for appealing. You can argue back, okay? These are some of the reasons that insurers are turning people down. Your loss history, the age of your home, age of your roof, maybe you have outdated galvanized pipes instead of copper, or maybe you have knob and tube wiring instead of a fuse box. Maybe you have some hazardous conditions that the aerial drone images caught, like a trampoline or a pool. Or maybe you're getting non-renewed because your agent is got a quota now on how many policies they're allowed to sell, and they've hit that quota. So there are 4 kinds of insurance companies: the brands that you know, the ones you've never heard of, or maybe you have. Lloyd's of London is one of the most famous ones. The FAIR plan, or your lender. We really recommend you not default to lender-placed coverage. It's a ripoff, to be blunt, and it really only protects the mortgage, your lender. It really doesn't protect you. But I don't mean to be flippant about it or minimize the pain of the pricing that everyone's getting hit with. But again, doing nothing, letting your insurance lapse because you can't deal, and having your mortgage company force place, not the move. All right. These are the names you all know. They're fully regulated. They participate in the insolvency fund. But then there's these new ones. Home Site, you might have seen, Sure Sage, Northlight, Those are some of these brands that you've never heard of that are coming into the market, picking up homes, and that the brand names have dropped. Some of them are fine, but again, if you're going to go with one of these, you really want to be working with an experienced agent or broker, because you can do your homework, but it's better to have them give you that reassurance in writing that the company that they're going to recommend to you has the financial strength to be there for you, if God forbid you ever need it. Okay. So what are some of the good things on the horizon? Farmers has opened up again for condos and renters, which is good. Even after the fires, they did not change that. You heard that mercury before the fires had gone up, and my organization actually helped make that happen. We introduced a mercury executive to a wonderful group, a nonprofit in Paradise, Rebuild Paradise, on one of my working group meetings. And sure enough, Mercury, they went up to Paradise, they toured, they saw all the hard work that homeowners are doing to reduce wildfire risk, and they agreed to write another couple hundred homes. And when I checked back in with that Mercury executive after the fires and said, hey, are you still on track here to write more homes in Paradise? He said yes. So that's a good thing. We also have a little bit of movement with some other insurers agreeing to renew people who have done risk reduction. The FAIR Plan is supposed to be giving you a 15% discount if you live in a Firewise community and you meet the Safer from Wildfire standards. All the experts are in agreement now at what are the things you can do. Class A roof, install screens to keep embers out. I'm not going to go through this whole list because I know we have other speakers and we have a fire expert coming. Just know this slide deck is going to be available for you through your elected representative. This is the IBHS program, Wildfire Prepared Home. More insurers are accepting that if you can get that certificate. Problem with getting the certificate? Time and money and heartbreak. It depends who comes out and inspects. Some people will say, I had an inspector come. I have a wonderful old oak tree. It doesn't touch my home, but one of the branches is within 5 feet. But it's not a fire hazard. It's an important tree. It gives me shade. Some inspectors will say that's fine, some won't. So we're working on this. It's a work in progress, I would say. So again, you got 2 sets of standards in California, Safer from Wildfires, which is CAL FIRE and the DOI, and then you have this IBHS, which is the insurance industry sponsored research entity, but they say the same thing. They all agree on the same set of tasks that you need to do to make your home less likely to be damaged in a wildfire and make your home more attractive to an insurance company. So again, work in progress here. Firewise is a really fairly easy designation to get. Much easier to have your community designated as a Firewise community than it is to get that certificate from the IBHS, but you want to do both if you can. And if you want more information about becoming a Firewise community, you can go on their website. It's fairly straightforward. FAIR Plan coverage is very basic, but you can enhance it. And so again, really important to work with an agent who understands what the FAIR Plan sells, so you don't end up with just the default coverage. All right. These are just some of the add-ons, and I can't sugarcoat it. The people who have lost their homes in LA that are insured with the FAIR Plan, a lot of them did not have good agents, and the agents did not understand these add-ons. And it's really important to know these are worth buying, right? Those optional increases, you want all of those. And again, I don't mean to be casual or flippant about the price. I know it's painful, but again, your home is your biggest asset. And if you're going to invest in insurance, you want it to be the right insurance. Okay. So a good broker or agent is incredibly important. These are just some of the affordability strategies. There's not a whole lot, but there's a little bit, right? Find out what discounts are available. Ask for those you qualify for. Bundle your home, auto, and umbrella with one insurer if you can. Work with that proactive agent. carry a high deductible. My deductible is 5,000. Many people I know now are going to a 10. It hurts. I can't, again, I'm not here to sugarcoat it. The higher your deductible, the lower your premium, right? You can look into how reducing or eliminating coverage you can live without will impact your premium. A lot of the time, though, reducing these coverages isn't going to make that big a dent in the premium. The biggest bang for your buck is raising your deductible and bundling. And then mitigating. Do what you can to work with your neighbors as well. Insurers are looking not just at your home, they're looking at all the homes around you. They want to see that big take up of proactive risk reduction. So in closing, again, because my organization does a lot of disaster recovery work, I've got to remind you, it's still worth keeping insurance, even though some of you may feel these insurers they're just not treating us well. Well, they're businesses, right? Insurance money, not charitable or government aid, is the #1 source of money that helps people rebuild and recover. FEMA is needs-based, and the average FEMA grant is 5,000. SBA loans are great, and hopefully FEMA and SBA are going to stay in place, notwithstanding some of what's going on in DC. But again, there's nothing like having an insurance policy to help you get back on your feet.
Thank you.
Thank you so much, Assembly Member, and please take a minute to visit our website and take our survey.
This is a great PowerPoint. Hopefully we can get that, and maybe we can put that out on our website as well for people to have access or send it to people. I know we're short on time here, but so I'm going to skip the questions for now. But our final guest is Chief John Morgan from CAL FIRE. John Morgan is the Deputy Chief running CAL FIRE's Wildfire Preparedness Division. Under his preview are the Defensible Space Program, Home Hardening Program, Statewide Burn Permit Program, Utility Wildlife Mitigation Program, and the Statewide Damage Inspection Team. So take it away, Chief.
Yeah, thanks for having us on here. CAL FIRE is committed to all of this initiative, and public education is one of our top priorities. I do want to point out a couple of websites that were posted in the chat. I do encourage people to go to those websites, one of which I'm displaying right now. This is our home hardening website, and I'm just going to highlight the interactivity of some of these things on the website. You can come in here and go through some of this yourself. And just, get familiar with some of the things that you can do on your home that will make a big difference when looking at even low-cost retrofitting options for home hardening, all the way up to replacing a roof, which isn't so much low cost, but it is very, very effective. So, some of the things here are very, walls and siding. You might not think that you would want to change your siding, but it's one of the greatest, along with roofs, it's one of the greatest things you can do. And something that a lot of people don't realize is where those fences come together with the house. Wooden fences actually bring fire into and up against your home. And so we recommend having non-combustible fencing. This happens to be chain link with aluminum privacy slats inside there. And it looks really nice. With that, I would also point you to some of the educational items that are available here. And you can go into this and start to learn a lot more about it. There's also a assessment that you can take, and it's really easy to fill out. It doesn't just stop with home hardening. You can also get a defensible space assessment for your home and fire smart landscaping. So as you go through this assessment, it'll ask you a series of questions. This is not an inspection. It has no ties to any inspection programs. This is simply for you and it'll actually send you a report when you get through the assessment, and it'll give you suggestions for things you can do. And again, that's found there on the home hardening website at fire.ca.gov/home-hardening. And the other one I'll point you to is readyforwildfire.org. It does have a home hardening webpage, but also it covers so many more items. Defensible space. What do you do to prepare for a fire? What happens when I get a notification to evacuate? All of these things are covered here. And there are even links to our Fire Ready application that you can have on your phone. You can get alerts, notifications for nearby fires, and updates as fires move through the area. So, I want to be respectful. I had up until 5:55, and it's now 5:58. So please let me know, if we're doing okay.
Yeah, I'm sure this is great information. Let's go a couple more minutes here, and then I might bring Amy back to ask a couple of those questions I had for her.
Yeah.
So.
Yeah. And, so the next thing I wanted to point out, I know we're talking a lot about home hardening, but I do want to stress that defensible space coupled with home hardening is a huge, huge advantage. And as you saw in some of those pictures, we're not looking for a moonscape, zero vegetation landscape. But it's important to create a buffer between your home and the surrounding vegetation, especially wildland vegetation. So it also provides a buffer for firefighters to do work near your structure. You could imagine if this bush were to flare up, that firefighter would have a very difficult time staying there. So it's just lucky that they're getting there right before the bush next to that house catches on fire. Zone 1 for defensible space is that first 30 feet out from the house. You'll notice this house also has gravel or hardscape around the first 5 feet around that home. That is also a huge advantage. But many examples here of homes that have good defensible space have well-maintained vegetation around their homes. So the point here is that, we're not really looking or even suggesting that you create a moonscape, but it is very important to make sure you have defensible space in addition to home hardening. And then we have zone 0 or an ember resistant zone recommendations, and you'll find those on those websites as well, so that you can understand some of the things that we're looking for, like using hardscape such as gravel pavers around your home, limiting combustibles. We actually saw a lot of fire occur in garbage cans next to the house during the January fires. So it's something to really consider. Also, that fencing, again, consider relocating your vehicles, boats, RVs, things of that nature also catch on fire quite a bit. I will give it back to you, and we can maybe get into some of those questions.
No, I really appreciate you being here, and I did post in the chat about our town hall coming up on May 15th, and we'll continue to do more talk around this because it's critical information for homeowners and people to have. So thank you so much for being here. If it's okay, Amy, I'll throw out these 2 questions. They seem kind of personal for some of our participants today. One was saying that her insurance agent has now enabled her to get the California Fair Plan. However, they don't cover everything. I'm sorry, and he is trying to get the insurance agent's trying to get them additional insurance to cover, except many insurance companies won't insure a house that's over 100 years old. So ultimately, she says that her home is in great shape, but they need to get coverage soon. So what does somebody do in that situation?
Yeah, so so there is a market, they call it difference in condition for these like supplemental policies. And there's and you know, even that market is a little they're using the same technology that the insurers are using, which is, you know, kind of targeting older homes. You know, keep your home in the best condition that you can, you know, do your regular maintenance of your plumbing. If you can, if the agent cannot find you, I mean, they just have to really be digging. And honestly, like you can try using more than one agent. I mean, you don't want to have two agents calling the same company, but if your agent comes back to you and says, this is all I've got for you, this and this, or I couldn't find anything, you can try another agent because each agency has their own relationships with different insurance companies. So there is a market out there for those supplemental policies. Hopefully, your agent will find one, and if he or she can't, I would try one more or two more agents.
Okay, that's good advice. The second question here is, our current homeowners fire insurance policy will likely not be renewed, leaving us with the hardship of having only one possible option to pay for the fair plan, which will likely cost, they're saying, 5 times more than what they now pay. They're retired on a fixed income, and this just isn't sustainable. Do you have useful recommendations for companies that will insure them for a reasonable amount?
Well, you know, that's the heartbreaker, assembly member, you know, I hear all kinds of stories. So, you know, that's why I tell people just try shopping. Don't go on rumors and what you hear, right? So just assuming that there's nothing but the fair plan is not a great idea because there are some innovators coming in. You know, some people are getting lucky with bamboo, and honeycomb is another one. And Sure Sage, and now there's Delos. So there's, you know, I've been waiting, like, where are the entrepreneurs? You know, where are those, you know, those competitive investor types seeing opportunities? And they're sort of trickling in a little bit. So again, it's a tough situation. Carry the highest deductible that you can. If the insurer will let you have a $20,000 deductible, and that'll bring the premium down to where you can afford it, go for it.
That makes sense. And you know, and California is, after all, the largest market for insurance in the nation. And I think I heard that we're 4th largest or in the world, you know, so insurers want to come here. They want to write these policies, and hopefully with the strategic plan that Ricardo, Commissioner Lara told us about, and the changes we're making in the legislation, will bring these companies back to write the policies. So
that's absolutely true. They were complaining as loud as they could that they, you know, they felt the rates were being suppressed. I don't know if that's true.
We want them back. We're ready to have them back, and we're doing everything we can. So I just our time is over, and I want to thank our speakers, Commissioner Lara, Amy Bach, and Chief Morgan. I'd also like to thank the commissioner's staff. Richie, you've been amazing for organizing this event, and I hope this information has been helpful to everyone who's still here. And you know, please stay safe out there. And again, contact our office if we can provide any assistance and resources. And I think we're going to try to make sure we have a page on our website with all this great information for everyone. So thank you. Be well.